Good day, Divergence traders. How we all doing? Today's Tuesday, September 19th, 2023. All right, let's take a look at the markets. So this is the nasty. Oh, I usually call it the nasty. I call it the NASDAQ. Anyway, this is the NASDAQ. Okay, I did a very early trade today. I'll show you. Let me show you. So we have a high, retracement, and a higher high. Looks like a double top now, but it's a higher high. Okay, and then from here, right down to here. Doesn't really look divergent, but it is. That's divergent, ladies and gents. That's divergent. So, I got in right here. Market started to go back up. I chickened out and I got out of the freaking trade. Once again, the market started going down. I got in again and market goes up. Okay? And I chickened out and I got out again. They spooked me 2 times, ladies and gentlemen. And this can happen, you know. It's like I was trying to, if we were going to fly up from here, I was going to try and cut my losses short. And I cut them short, all right. I cut them too quick and too short. So I lost on those 2 trades. But then it came down again right in here. And I said, it's got to be going down. It's just got to be. There's no news. There's no nothing. See how you can't just look at a chart and go, okay, I'm going to buy or sell. You got to look at, well, what are they doing? What is the price doing? You know, this, that, the other thing. Instinct, gut feeling, plus a technical pattern on the chart. This is how you need to trade. Is there news today? Oh, there is no news today. You see, you got to ask yourself all these questions before you get in the frickin' trade. Anyway. So I did good. I got in and I got out right there at S1. Why did I get out at S1? Because I thought, well, it's a Monday. But I bet the bastards will come in, you know, for the opening of the stock market, which was right here, this big long wick. Here, let me open this up here. Okay? And that's why I got out here. So I made 250 ticks. It was a nice trade today. And then what did I do the rest of the day? So I don't give it back and they don't take it back from me. I haven't traded since. I got out of the trade and that's it. But let me show you the other trades that, you know, you could have done if you weren't already in. I was in from, okay, first one was here, second one. Yeah, I was in right here. I was in from right here. When it started coming back down again. And then once I noticed that it was falling heavy, oh yeah, I knew to stick with it. At least down to here. This yellow dash line is the low from yesterday. And I had a funny feeling that when we came down here, it was very close. I said to myself, oh, I bet we're going to hit that line today. And we did, right? We did like 15 minutes later on the opening. The opening of the stock market was right here. So anyway, here's the other trades. Higher closing. Bar. Down it goes. Higher closing candle. Down it goes. Higher closing candle, but you suffered drawdown on this one. And man, down did it go. Okay? Some nice trades there. So, there was how many of these trades all the way down? Okay, there was 1, 2, 3, 4, 5. Would I try and do it again here? Hell no. Because it did it already 5 times. We don't know what's going to happen here. For all we know, they could take it back up here. And you know this NASDAQ, it's not it's not normal. It can pop back up at any given moment. That's why you got to think about all these things as you trade, okay? So anyway, I did a good trade today. All right, made up for yesterday. Let's move on now. That was the 5-minute chart on the NASDAQ, okay? Let's now look at the 2-minute on the NASDAQ. Okay, so it opened up right here, 9:30, okay? So did we have a trade to sell? Oh, you betcha, you betcha, you betcha! Right here. Boom and boom. And right here, see? Right there. I know, I stretched it, but it's just little doodahs, you know. It's on a 2-minute chart. It doesn't really mean a lot. So anyway, when you see, like, let me learn how to talk. Okay, let me make it bigger so you can see it easier. Okay. Okay. So when we have a retracement in the market, like on a 2-minute, see the 2-minute, the 5, which is the white dashed line, crosses back up over the 7, which is the pink line, okay? Cross back up. Now what we're waiting for, well, you look for the setup. Here's the divergence to hidden divergence, hidden bearish divergence right here, okay? Or hard to see divergence. That's what I call it in my course, okay? So you go, oh, now we just need to wait for the 5 to cross down below the 7 and the price to close down below both moving averages, which was right here. So if you got in right here, how much did it go down? Well, let me tell you. So you would have got in right there. You see, I've refined this to such a intricate understanding that I know the exact moment that my setup sets up and the exact moment in time when I'm supposed to get in the trade, because you're always trading from a closed candle, okay? So the candle closed right here, I would have sold it right there. And how much potential did we have? Look at that, more than what I made. I made 250 ticks today. This trade was good for 280 ticks maximum potential, okay? Doesn't mean you would have made 283 ticks, but maximum potential was 283 ticks right to here, okay? Then we move along. Do we have another trade? Oh yeah, just like that one. It usually happens in a major move down with swings back up along the way, right? So you draw it to there, okay? And from your high here, right down to there, okay? We would have got short right in here. Let me put an arrow on these suckers, just so you know where you would have got in if you watch the video again. And right here, see, same thing happened. The 5 crossed up above the 7. Now we're waiting for it to cross down again and price closing down below the moving average. So you would have waited right here, okay? Oh yeah, there's an arrow. Wrong one, wrong one. Okay. So you would have got in the trade right there, ladies and gentlemen. And your max potential for this trade, see on the close of this candle right here, max potential was 178 ticks. There's your 2 trades of the day. Both of them hard to see hidden divergence. Did they work out splendid? Yes, and they worked out with next to nothing drawdown. Okay? Can you see how powerful divergence is, ladies and gentlemen? I hope you can. So that was the 2-minute NASDAQ. Okay? There you have it. And like I said the other day, I think it is wise that each day, you know, at the end of the day before you start trading anyway. Well, you can do it like if you come at 9:30 in the morning when the stock market opens, you need to put whatever color you like. You need to put a line for the low of yesterday's low and the high of yesterday's high, because you never know when it's going to come to it, bounce off it, and go the other way. Okay? Okay. So now look at the S and the P. This is the 500. We basically had the same trade, okay? Right here, retracement and higher high. Doesn't even look like that's lining up with that. Oh, somewhere up here like that. Here, let me see where that's lining up. Right there. Yeah, I knew it was past there. Anyway, there it is. And remember, you always draw on the chart first. You look at the chart first, you find the high and the higher high, or the double top, or the pullback, like if it's a trend trade, okay? You always first look for it on the chart. Then you go down and you look at it on your indicator of choice, whether it is stochastic, MACD, RSI. I don't use none of that stuff because I believe I have the best indicator. Like, I love it so much. If I die, I want to take it with me, but I can't. I never created it. Okay? It's the best, man. It's the best indicator to look for divergence. If I was to put MACD on here, you would see why. The mountains and the valleys are so, they're not even hardly there. You can barely see them. That's why MACD does not work like the OSMA does. And you know what's really funny and really weird? OSMA is part of MACD, or it was formulated from the MACD. Golly gee, it was formulated from the MACD. I'm a poet and didn't know it. Okay, I'm talking today. Okay. This is a 5 minute, so the trade was up here at around 7 o'clock. This was 7 o'clock when the UK session ended. So if you would have got short there, down she goes. Now, let me show you a few of those pullback trades. Higher close, down it goes. Higher close, down it goes. A whole bunch of higher closes. Well, that's 9:30, that's why. Okay. One more trade here. Right there. See the blue doodah sticking up saying, hello, hello, draw from me, draw from me. Right here. And there it is. La-di-da. And where would have you got back in? Right on the opening of this candle. See? It squeezed up and kissed the 5, kissed the 7, but it never crossed up. Same thing though. It went up and hugged it, give it a good hug and a kiss, and then said, see ya! And down it goes. So anyway, the potential on that trade was, let me show you. Oh, wrong doodah. Right from the opening of this here, max potential was 90 ticks on that trade. Okay, let's take a look at the 2 minute now on the S and the P. And we have the same trades as the NASDAQ. Okay, hard to see divergence right there. Another one right there. Okay. Oh, maybe not. Oh. No. We have to draw that. No, there was no trade there. Sorry, my bad. Just the one. One's better than none, right? Right. Same situation, ladies and gentlemen. The 5 came back and crossed back up over the 7. And then, actually, it came down and closed below right here, but they shot it up quick. They would have got your stop if you would have got short right there. But if you did, you lost. And, you know, right here, you lost a few ticks, whatever. So then you would have got in again right here, short, and down it goes, right? You would you would have done okay. Sorry, I can't talk sometimes. I got injected with the jab. Modzi Tabernac. All right. Total tick potential, 83. There you have it. There you have it. So that is the NASDAQ. No, the S&P 500 2-minute chart. Okay. None of these return, because they're above the moving averages, I would not take these as sell trades. Higher close, down it goes, higher close, down it goes, higher close, down it goes. I would not take any of those trades because all of them closed above the moving averages. Okay? That's another pointer I'm giving you. I just love to give you guys good stuff. I want you guys to be successful traders. I still think you should pick up your copy of my divergence course, you know, even if you don't use half of the stuff in it. It's there for reference, right? So, but whenever you want, you can come back to this channel and just watch all the new stuff I teach you almost every day. And that's why I'm here, to share it with you. And the people from the future, the traders from the future. Maybe your kids, because I know a lot of you that are watching are young people. Okay? You're like in your 20s. I know that. I know. I know the next trading generation. I come from one of the older trading generations. I'm 59 years old, but I still know how to trade. And I still can teach you some good stuff if you're willing to learn it. Okay, let's look at the pound dollar. No, not the dollar. The pound. Mode Z. Not the pound dollar. All right. Oh, I was going to say, where's my boxes? There they are. Okay. This is the pound. We don't have a trade to go all the way up here in the 5-minute. Oh, man. That's okay. We still have other trades. Okay. Lower close right here. Buy it on the close. And up it goes. Lower close. Buy it. And up it goes. See that? See that? Isn't that cool? Right here. Remember how I talked about you let, if the price has not closed back near the 5 or the moving averages, you got to wait for another candle to close into the zone right here. Let's see. Let me make that bigger. Okay. So then on the close of this one, or the opening of this one, you got long and up it goes. Once again, right here, see, once it's touching the line, the 5, Johnny 5 come alive, right there, see, right there, lower close, up it goes. See that? Isn't that cool? Those 4 scalp trades, very little drawdown. Amazing, amazing, and like we're talking high precision entry points. That's how cool that is. Yeah, it's very cool. Here's one here. Oh, do we have divergence up here? No. Oh, maybe. Hold on. From here. Oh, it might be what I call level divergence. Oh. Oh, it's going down, see? Yeah, it's going down ever so slightly. Watch, I can put a... Oh. Okay, hold on, hold on. Watch, watch, watch. Where the hell is it? This is how I check. Oh, here it is. Here it is. So if I put a line right there, see that? See this space here? See, it's going down. See? Pretty cool, huh? That's how you can tell if it's coming from a higher slope to a lower one. It's just ever so slightly divergent. So right from here, yeah, right to the top. Yeah, that's a trade. That's a trade. Okay, so you would have got short right there. And the max potential is, we'll say somewhere in the middle we got in. Point potential, not pip. And there's 24 ticks or points you would have got on that trade. That is the 5-minute pound. Okay? And now in here, there's actually a trade here, but it didn't go very far, did it? But I gotta show you. We got like a double bottom, see? Right there. And you would have got in right there. And right from here to here, see? That's divergent if I ever did see it, but they're playing games right now and taking it back down again to the pivot. They bought off the main pivot right there. Boom, shakalak. It's only like 10 or 12 or something stupid. Not even 10. 8 points. That's it. You would have got out of the pound. Oh, the pound used to be so good long time ago. Not anymore. Euro's probably better. Let's see. Oh, yeah. Oh, look at the nice divergence on the euro. Okay, what do we have here? We have a double bottom if I ever saw one. And right there, boom, luck. And entry was right there. And max point potential was right up here. 61, man. See, that's much better than the pound. 61 points on the euro, baby. Woo! Gotta love it, gotta love it. Gotta love that. Better today. See, yesterday it kind of sucked. Today, much better. Much better to trade today. Okay, let's move on here. We got a high, a retracement, and a higher high right there. We're almost done, ladies and gentlemen. It's okay. I want to show you everything today so you can learn from it. That's divergence, ladies and gentlemen. Oh, yes. And the entry was right there, or you would have got in somewhere right here. Okay? Say we got in, we wanted to make sure it's going down, right? Because look at the big long wick back up. They bought it back up. So say we waited right here for it to break, or we put an order right here, a sell stop right there. Boom. Okay. 48 points, ladies and gentlemen. And here's that same trade again, like on the pound. I'm not going to draw it up. Double bottom right off the freaking main pivot of the day. Definitely divergent. See right here? But it didn't freaking go anywhere. Okay, let's take a look at our last instrument for the day, and it is called oil, Texas crude. I was already checking it out earlier. I drew it on there already. I was showing my friend the trade. The trader friend I've known since 2006. And he lives down in the Bahamas. Pretty mama, Key Largo, do-do-do, oh, pretty mama. Yeah, I've been there myself. NASA, Bahamas. Back in 2012 I went. Look at this. The indicator followed the price. There's no divergence up here to sell it here. The only thing you could do is selling the cross down below the 7, the 5 below the 7. You could have jumped in right there. I know a lot of people go, I'm not going to get in the trade just based on some stupid dumbass moving average that crossed over. I don't believe in that shit. Well, maybe you should. Maybe you should. I've been using moving averages ever since I started staring at charts in 2005, which was when I started trading Forex. I went from the grain markets to the currency markets and back to the futures markets, but now I look at the indices and oil, and I look at what moves. Okay. Do we have a trade? Yeah, we do. Let me show you. It didn't do much, but let me show you. We can't leave it out. We don't want to show you the good trades and then not show you the bad trades, and then next thing you know, I got people saying, "Oh, he's a fraud, that guy, that Jason guy who shows his setups." You know, right here. Entry would have been right there. Didn't go anywhere. Didn't go. Okay, you would have got in right on the opening of this candle. And where did it go? Nowhere. Total max potential, 23 ticks. That's it. And then it went right back down. And then it went right back up. And that's it. Okay. So, once again, this is Jason Sweezy here, and I like to trade divergence for one very, very critical, simple reason. Because it works, and I prove that it works. I show it to you every day here on my channel, and I appreciate you coming and watching and listening. And if you could be so kind to hit the like button and subscribe, because it's free to like, it's free to subscribe. Okay? Okay, you guys have a great day. Good luck and good trading.